That budget yesterday, lots of numbers flying around, including the $8 billion US dollar package for COVID, COVID plan.
Yes.
On your Facebook page, you also mentioned $107 billion Sing dollars, that is a number. Can you put that in perspective for us?
Well, it will be, one of our biggest budget so far, and that covers quite a range of things, including this COVID resilience package, 11 billion Sing dollars, for us to emerge out of this COVID. The COVID pandemic is not over, and therefore we need to continue to provide support in a very targeted way to continue to help our firms and workers in the worst affected sectors.
So fair to say that the 107 billion Sing dollars is the budget for 2021?
Yes.
You talked about how Singapore is also looking at the different scenarios. I mean, we're dipping into the reserves for the second year running now.
Indeed.
Under what circumstances do you think that you may need to dip into those reserves again this year?
Well, it depends on the trajectory of the pandemic, and which will then shape the trajectory of the global recovery. So if the recovery is as we expect, our sort of central scenario, then I think we should be able to balance our budgets over this term of government. But if the pandemic is more prolonged or the recovery is weaker than we had hoped, then of course the global situation will be different. And Singapore is very dependent on the global economy. But at the same time, COVID has accelerated many of these big changes that are happening. And it is important for us to continue to invest, to plan for the long term. And we will then look at whether we should continue to have to use the past reserves to fund that long-term investment.
So having said that, when you look at this budget, fair to assume that we have seen the full extent of the impact of COVID-19?
Whether we've seen the full extent, no, we have not. We have not, because I think the COVID situation is still evolving. I think the introduction of vaccines and the hope for vaccinating a big part of the global population brings us hope for recovery, and that's why you find that the global projections have been quite good, and we are likely to recover. But still, there's still a cone of uncertainty. It depends on whether the vaccination goes as planned. To vaccinate a large proportion of the global population is not straightforward. And at the same time, whether mutations arise that will require new round of vaccinations, those are the risks that we have to plan for.
DP and Heng, you talked about having to rebuild the reserves, having dipped into it already. What role do you see the state investment companies playing, the likes of Temasek, the likes of GIC?
Well, they will continue to invest in a way that they have been investing, which is that in the case of, for both entities, they invest in a range of asset classes in a well-diversified way to give us good long-term returns, real returns, which would help us to continue to grow our reserves as our GDP grows, and two, to enable us to spend 50% of the net investment returns. So those roles would continue, but our investment for growing the economy is a separate work. It's a work of the Ministry of Finance and our economic agencies and our Future Economy Council to look at how we can invest resources to help our businesses to meet with these major changes which are coming up, as well as to ensure that our workers are well trained, well skilled, so that they can take on those better jobs.
But in terms of the contribution, have you been satisfied with that performance so far? If you take a look at the NIRC,
yes,
the not investment returns contribution, it's
yes,
$17, $18 billion. Do you see that being sustained, or do you see them contributing more?
Well, it depends on our overall revenue position, but I expect that our NIRC will continue to be a major contributor. As it is the largest single component of our revenues, more than GST, more than personal income tax, more than corporate income tax as the single category. So it will remain important, and which is why it is so important for us to safeguard our reserves properly.
So are you concerned about the volatility we're seeing in the markets, because their performance is also contingent on how the market really is?
Well, market volatility will always be expected. I think that's the nature of financial markets. You recall that not long ago we had a global financial crisis and the Asian crisis. So I think any investment manager must take into account volatility. And it is the flip side of return, right? Risks and returns are always there. The question is, how do we have a better diversified portfolio with various strategies to ensure that we continue to get reasonable returns and that we're able to ride out the market.
It was pretty obvious in the budget that the green agenda is front and center. You talked about perhaps raising as much as 90 billion Sing dollars through green bonds. Can you shed some light, on when that will happen and which projects will be funded by those green bonds?
Well, there are. I made two announcements about the issuance of bonds. The first is that for our significant national infrastructure, we will have our new loan act, which will allow the government to borrow up to $90 billion for infrastructure investment. And the reason for doing that is that this is fair, because infrastructure project will benefit many generations, and it's important that each generation foot a part of it. Otherwise, we would have to raise taxes just to fund those investments. That's not right. And second, it is efficient, because right now global interest rates are very low. And if we can catch that cycle, we will be able to lock in some of our long-term investments. So that is one part of it. The other part of it is that we are issuing also $19 billion of green bond, 19. And this $19 billion of green bonds will be used for projects which are green. And I mentioned a number of them. One is our coastal defense. We need to build our coastal defense. And two, the projects relating to, for example, our plants at Tuas, where it will be a plant that manages energy and waste in a better way. So all those are green projects, and we hope that it not only helps to catalyze the green bond financing market, but it also complements what MES, the Monetary Authority of Singapore, is doing to promote green finance. We have a green finance action plan for us to do all this. And of course, it also complements what we are doing in our R&D efforts. I think the future of sustainability has to be driven a lot by R&D into what are more sustainable solutions and how technology can play an important role in this effort.
Some say that your plans for the bond issuances would mean that perhaps Singapore will never have to dip into the reserves again. Your thoughts?
No, I think there are separate considerations. Yeah, it doesn't mean that we'll never have to dip into reserves. As I alluded to yesterday, the ability of the government to finance this $24 billion of Emerging Stronger program with many important elements for us to get out of this COVID crisis stronger is that we expect the global economy to recover, we expect our revenue to recover. But even if it does not, we must still invest for the long term, because these are major structural changes that will come, not just in the next 1 year, but the next 5 to 10 years. So the earlier we start, the better we will be. And I hope that the business sector will partner us in this effort. So if we have to do that, we'll find the resources to get it done.